As the world shifts towards economic stability, gold has regained its stature as a pillar of financial security in 2025. This year, gold prices have skyrocketed, crossing the remarkable threshold of $4,000 per ounce, creating waves across global markets. Investors are flocking to this precious metal, which is now seen as the safest asset, reminiscent of its traditional role in turbulent times. The World Gold Council's report indicates a significant movement in the market, with central banks collectively purchasing over 15 tons of gold in August alone, reflecting their confidence and reliance on gold to shield their currencies from economic instability. Leading the pack, the United States remains the dominant holder of gold reserves, boasting a staggering 8,133 tons. Much of this treasure is safeguarded in iconic locations like Fort Knox and the New York Federal Reserve. The U.S. has chosen not to enlarge its gold stocks in recent years, preserving its cash as a powerful symbol of national financial strength. This steadfastness exemplifies how the U.S. banks on its golden legacy to bolster confidence in its economy amid shifting global dynamics. Germany, with its impressive 3,352 tons of gold, also highlights the trend of gold repatriation. Known as Europe's economic powerhouse, Germany has strategically brought back a significant portion of its gold reserves to protect its economy. For Germans, gold is not merely a commodity. It serves as an ultimate line of defense, particularly crucial during potential financial crises that may impact the Eurozone. Italy's gold reserves, tracing back to the post-World War II period, stand at 2,452 tons. The Bank of Italy regards its gold as a steadfast guarantee of trust within the nation's financial framework. This intrinsic connection to its historical past complements its role as a buffer against market volatility, ensuring a sense of security for Italian investors. France, holding 2,437 tons, maintains its stable gold reserves, viewing the metal as an essential instrument of economic balance. This stability supports the Eurozone's currency stability, lending credence to France's approach in the global economy. Meanwhile, Russia, possessing 2,327 tons, has embraced gold following Western sanctions, integrating it more deeply into its foreign reserves. Gold has become a cornerstone advocating for Russia's financial independence, fortifying its economic foundations against external pressures. As one of the world's foremost economic powerhouses, China continues to bolster its gold reserves, amassing 2,301 tons. This strategic accumulation, highlighted by the addition of 2 tons in August 2025 alone, reflects the nation's ambition to elevate the yuan as a premier global currency, while diminishing its dependency on the US dollar. China's actions signify a broader trend of central banks diversifying their assets to fortify financial stability. Switzerland, though modest in size, holds an impressive 1,040 tons of gold, anchoring its reputation as a leading financial center. Renowned for its stringent security and privacy laws, Swiss banks assure investors that their gold is not just an investment, but a refuge during economic unrest, influencing global demand for safe assets. India stands strong as the world's largest consumer of gold, with reserves totaling 880 tons. Cultural traditions, religious significance, and the opulence of jewelry drive this incessant demand. The Reserve Bank of India's decision to ramp up gold purchases aims to support the rupee, a vital move amid economic fluctuations that highlights the intertwined nature of culture and finance. Japan, holding 846 tons of gold, has kept its reserve levels relatively stable over decades. This steadiness illustrates gold's role as a protective buffer for the yen against unpredictable market conditions. Meanwhile, Turkey strategically expanded its reserves to 639 tons, particularly in response to inflationary pressures and currency volatility, acquiring over 21 tons in 2025 alone. Overall, these nations' gold reserves reflect their unique economic strategies and roles in an increasingly interconnected global economy.